What's up, guys? Just give me 1 sec. Okay. 1 minute. Just adjust something. I'm gonna rearrange this so it looks a little bit cleaner. Put some, oh, wait a second. Actually, I don't want to fuck this stream up. I'm messing around with too much. All right, guys, what's going on? Give me 1 sec, and oh, that's what I wanted to do. I want to get rid of some stuff to make room for the chat window. Can you guys hear me clearly? Once I get a sound check, I'll do the rest of the stuff. Just give me a quick sound check. Cool. All right, now let me just add a chat box. How about chat? Okay. Ooh, that was fast. Nice. One sec. Hey, good. Cool. All right, what's going on, guys? Didn't schedule a stream, but it's good morning, so I figured it'd be good to hop on one. I actually just closed out a long. I'll go over that in a second. No LARPing. I actually closed it out a couple $100 below here, so it was a quick scalp. But I'll go over that in a minute. We'll take a look at. Obviously, everything's taking place. You know, shoot the shit, do the same shit that we do. Ooh, excuse me, double shit. I think I have to make sure I clean my language up a little bit more, especially if I want to grow the YouTube and get back to streaming. I definitely don't want to be one of those idiots that has to constantly resort to using, I don't know, crass language and scraping the bottom of the barrel with the way that I talk. So give me 1 sec. Dog's going kind of crazy back there. As you can see, she has, hey, say hello. Hello. She has a big ostrich bone right now that she's really digging into. All right. Yeah, we'll go over everything, a little bit of everything. Markets as a whole taking a hit. Looks like ES now finding some decent support at a prior day's lows. Good scalping environment right now for sure. Crypto doesn't look too hot as long as equities don't look too hot. And, you know, I think we've gone over that now for some time. I'll just say hi to everybody. Or before I say hi to everybody, I want to have this more structured, obviously. I do streams on YouTube and Twitch. So if you don't follow me, go to Twitch, search Canteringclark1. Damn, that long would have actually had some legs. Canteringclark1. Follow me on there, subscribe on there. If you're not already subscribed to the BlockRoots YouTube, go ahead and subscribe here. I'm sure most of you know who I am now if you use the link on Twitter, Ryan/Canteringclark or Ryan Canteringclark on Twitter. Yep, my name's Ryan. Everyone's been calling me Clark forever, and that is just one of my wife's many horses. One of my wife's many horses, one of my many headaches. No. All right, so formalities aside. Okay, so you see the links below for the things that we like to use. Plain and simple, right? Partners with Phemex.trade going on 2 years now. I've been saying that probably for the last couple months, going on 2 years. We're just almost at the 2-year mark. So I've been partners on the team with Phemex, myself and Rager. So for those of you that are not familiar, Josh Rager on Twitter. My partner and co-founder at BlockRoots. We're going to be a lot more active because I think the market is going to be somewhat boring. So it'll be good to sort of get on here and converse with you guys. I'm going to be using call-in more, so I want to do a call-in later if you guys are down to do a call-in. So I'll share the link on my Twitter page again. I know they only have it's only capable to work with right now only iPhones, which, you know, if you're not an Apple fan, sucks, but they will be integrating with Android as well. So call-in is it's like a Twitter Spaces, but it's recorded. Hey, quiet down back there. Too big of a bone. It's probably going to be pretty annoying. Call-in is similar to Twitter Spaces, right? So I want to do streams and then call-ins later on after the stream. So, you know, you're commenting and hitting me up in DMs, and, you know, I got almost 100,000 followers at this point. It's very difficult to keep up. Some people are good at keeping up. I get it. But like I always say, just as a sort of disclaimer, I'm not a streamer. You know, I try to be. I'm not a spokesperson. I'm not a marketer. I'm a trader. First and foremost, it's what I've always known. So it's very difficult for me to suddenly leave what is taking place in the market and just completely be this person who can respond to every message, every comment. I just can't. I only have so much bandwidth, as I like to say. And as it is, I get on during some periods where there is a good amount of volatility, and hopefully I won't continue talking. We'll actually be able to take some more trades during the stream. But call-in's great because you can hop on after this and we could just converse, right? Have a conversation. And it's also recorded. So if you're late, if you have an Android and, you know, you're like, I'm bummed out because I'm missing the first few call-ins that he's doing. I want to talk to Clark. I want to talk to Ryan. His dog is really cool. I want to tell him, you know, that I have a Ridgeback too. Whatever. We keep the conversations as open as possible. I don't want to like become just like the trading person to you. I think that there's a lot going on in the world right now. We don't want to get deep into anything else, right? We don't want to suddenly turn the call-ins to a conversation about surfing or golf. But the point is, it can go anywhere. So if you're not able to get on there now, they'll be recorded. So that's the benefit of them. And David Sachs is the one that has come up with this company. And if you guys watch the All In podcast with Chamath, who else is it? David Sachs. I can't think of the other two guys' names. Either way, whatever. So just a couple things aside. Remember, if you're interested in checking out Phemex, phenomenal exchange. Like I said, I wouldn't put my name behind it just for a ref link. All right, we're actually on the team. The link is below, Phemex.trade. There's a ton of giveaways going into the end of the month. There's also a couple other links below, right, if you want to use something else. As well as, what else? One more thing. Most importantly, none of what I say is financial advice. Okay, none of what I say is financial advice. This is strictly for entertainment purposes only. All right. That's it. Right? You're on your own. Okay, you're responsible for your own trades. What you hear here, do not go mash the green or the red button because you heard it on my live stream. I mean, Lord knows that I changed my mind on a dime, and that is probably one of my strong points is that I can change my mind very quickly. I don't get wrapped up into what my original conclusion was. That's what sort of a, is a, it's a problem for newer traders. They sort of feel like they have to be right the first time around, and they're willing to punish themselves in the event the price goes against them just to kind of keep the position on for what? Honor? Who knows? I'm able to change my mind very quickly. Professional traders as a whole are able to change their mind very quickly. It's what keeps you alive in this game. All right, we got some good coffee this morning. So we changed the brand of coffee, and I've felt it for the last week, which is good because I was drinking like shit coffee, and I don't want to say shit coffee because whatever, it's coffee. But I was drinking, Folgers, 1 scoop per cup kind of crap, not having any espresso in a long time. It's different. It's less concentrated, and I don't know. Anyway, what is going on, everybody? How's everybody doing? Good to see some familiar faces. First time on the live. Dennis, what's up, man? If I knew you were going to be here, I would have wore something nicer, and I would have dressed up for you. All right. The tunes I'm listening to are honestly, the playlist is called, hold on one second, I'm going to get you guys the playlist. It's pretty good, right? It's like a mellow mix. What's it called? Come on. Share, maybe? Share playlist, copy link. Here we go. Right there in the chat. It's non-copyright music, and I'm constantly getting like infractions on YouTube because I play things that are, I guess they start off as non-copyright or not copyright, and then the artist obviously gets it copyrighted in the future, and I don't adjust, and you can't monetize videos, but we don't monetize our YouTube videos either way. So another thing, yeah, our YouTube's not monetized. We have a large amount of followers. We probably could, but for the most part, it's not like, for the most part, what am I kidding? We're not making any money from YouTube. I mean, technically, you could say like, I think we make like $5 a month or something like that, something ridiculous. But yeah, they block out anything if like, otherwise I'd be playing all the music I would want to listen to, but we can't. You get shut down hard. All right. Oh my God, the dog is chewing the shit out of that bone. The golden ape. I don't say exactly where I bought the golden ape. No, I got the golden ape as a gift from my wife, and wherever she got it is where she got it. It's not a gold ape, so just so you guys know that it's not an actual gold ape. It's not solid gold. Yeah, I like Appaloosas. I have an Appaloosa. One of my horses, Simba, is an Appaloosa. Okay. The Golden Ape Store. Duh. Yeah, obviously. Yeah, I have an Appaloosa. We have American Quarter Horse, 2 American Quarter Horses, Appaloosa, and working on, still, it's a work in progress to find my wife the proper hunting horse, because one of the horses, Journey, that was, well, no, you guys know the whole story behind her horse and how it was, they're our horses, but I think you guys have been following now. You know that the horse was on a main road, escaped the hunt, ran onto a highway, cops, everything, and retired. So, yeah, we have Simba, Journey, Clark working on the 4th. All right. Nope, never been to the races in the UK, but we are going to the crap. I forgot what cup it is in the UK. It's a pretty famous one. All right, so let's get it going. One sec. And trading screen. My wife actually. So I'll just one last question, Patrick. The dog. Hold on one sec. Maybe I should put the dog outside because the chewing. She's just ripping this bone up. Hold on one sec. Come on. Come on. Let's go. And there you go. Okay, sorry about that, guys. That ostrich bone is getting torn up. All right, so I saw one more question before I get into the charts. Patrick, Vizslas. My wife loves Vizslas, but we both decided we love Rhodesians, so we agreed on a Rhodesian because my original pick was a German Shepherd. I grew up with German Shepherds when I was a kid, and I had a Rhodesian as well. But yeah, Vizslas are great dogs too. Okay, so sound is still good. I got the Stream Deck. I really like it. Just make sure that, let me get this music out of the way. Make sure, okay, good stuff. What's up, Matt? All right, so a couple things really quickly. The long that I took was, 9 times out of 10, I'm going to be taking a long when we're reapproaching a significant low after spending some time away from it. So in this case, if we just look where we sit on the chart, stuck in a range now since the beginning of December, very tight range. I think it's becoming more and more apparent that we're favoring the low side of this range, putting in lower highs across the structure. One thing that we haven't done, which, doesn't have to happen, but I've been saying that this is something to expect since the beginning of it, since we put in the first bounce, was a couple things, right? One, I'm just hanging on this sentence. It's not, I didn't come up with it, but the concept of big ships turn slowly, right? We're very far off the highs. Very far off the highs, you got to start thinking, okay, at least at some point the risk reward for a short has to start, diminishing, and at some point you're looking for some type of corrective bounce to the upside. Well, what is the some point, right? It's definitely not in an instant without a catalyst, without a bunch of short fuel. So we don't have any real short fuel. As we've been talking about this, early on it was like, okay, funding is going negative, but remember, funding has to stay negative. So sideways price action, funding staying negative. The best case scenario, funding staying negative, open interest going up. Okay, so then we have some fuel. So we don't really have any of that yet. What you expect after a big sell-off is a longer range consolidation. And just remember that this could be a micro range that forms within a much larger range that ultimately is the consolidation, right? It's easy to sort of be too scaled down and to think on very low time frames and start, telling yourself a story of, this is the consolidation. We put it in for some time now, and it's like, no, it's only gone on for, less than a month, and we've done this for 2-3 months at a time before ultimately turning. But one thing, going back to the, beginning of this structure, it's great to get involved around liquidations. I paper hand these too, right? So I always get involved when we get a ton of liquidations. That's one of the best trades that you can get involved in. For me personally, I know that it's a moneymaker for myself, for a lot of other traders that take advantage of sort of the conditions right after them. But I just don't have the balls to hold it after that. When it would have been amazing, right? To hold from these lows and then realize that you're going to get this correction all the way to the high. Meanwhile, my liquidation plays usually get involved at the lows, and it's within the structure. You're lucky if you're towards the low of it, but hold on for dear life with spot. See that we've, seen a significant amount of liquidations. A little bit of buying is pushing the book up. And then ultimately, I always end up selling right around where structure begins to first form. And in the back of my head, I'm like, this is probably the bottom. It usually ends up moving up much further and covering this gap. But I always say, all right, I'll get back in that. I just want to capture this. And I think it's for the better, honestly. It's worked for me up to this point. I don't see a reason in fixing it if it ain't broken, right? But one thing that I've been saying since the beginning of this is, if it prints there, just like Jimmy Jude said on Twitter, similar to what he said, right? If it prints there, then it's going to trade there. So there being across the board on multiple exchanges, just where there was really no trading at all, right? So we're looking at the wick. And we know that when we're looking at footprint charts, when we're observing order flow, you could look at a profile. We know that the wick doesn't necessarily mean nothing traded there. So you could have a wick where there was a ton of activity, and you could have a wick where there was no activity, right? In this case, if we just look at sort of the visible range, there's really nothing that took place down there, right? Really nothing that took place down there. Even if we put sort of the session volume on just for that individual day, there's some times where you'll see a really big wick, and you'll have a pretty thick non-single print, and it's not a single print, non-excess at the lows in terms of the profile. We don't have that, right? That's clearly an area where there was really no two-way trade. Not much activity, right? So it's more or less a gap, We came out of there very quickly, just on little effort, right? Which is one of the sort of reasons to get behind a trade once you start basing out after you have a ton of liquidations. But we've had wicks before where there's been substantial activity, right? If we just go back to this structure right here, you have a wick, and you have a thick, pretty decently thick profile. You know, a wick is dependent on what? It's going to be dependent on the time frame, right? If you're looking at a 5-minute and then you look at an hourly, right, you could have two completely different stories because you're just looking at, depending on the time frame, 4 pieces of data based for the candle. So you really want to make sure that, for one, you know, the wick actually is, in this case, that there's nothing really that took place down there. Because chances are, when you get back to the wick, so just let me zoom, go back to that area. Chances are, once you start going back into this level, we should reject this area. You would expect this area to act as support. So that was one of the reasons why I never mentioned why I got long. Coming into that area where the wick starts beginning, where things begin to really fall off, there's kind of a cliff in terms of the profile over the course of this entire structure. Makes sense, right? It's a range extreme. And also ended up taking out the lows from the 13th. So good enough area to get involved, especially when you start building a base case for this. I didn't want to try to tick this one and assume that it was going to reverse on just a little volume, because ultimately what we did have happen was price was able to more or less gap below the lows and hang out. So what I'm talking about is it's easy for you to say, like, oh, we're back below 46 in the region of, the low region of this range. Oh, and here's a ton of volume that just came in. Oh, and now we're trading above it, right? So let me just put my drawing tool on. One of the things I look for just in terms of the order flow, if I'm looking for some type of short-term correction back in the opposite direction, is if we take out a low and we have a lot of volume, what do we talk about? Well, we talk about being able to retrade above that level and hold it, right? Hold and sold. And then ultimately what you're expecting is all the short activity that came in and made that pocket, right, leads to a reversal. One thing I said, and I think I want to reiterate certain things more moving forward, is give it time to develop, right? Give it time to develop. It's the market has been under pressure at this point. It's not just moving down on its own. ES today is, back at 47. My Lord, good job. But mind you, as this is moving down, the ES is pushing down as well. So it's not like this is existing in isolation. We don't, have the benefit of existing in sort of a crypto vacuum. So what you want to do is see this develop. You want to see that this area overall, right? So first, we're getting selling in this level, but buyers come in initially right away. You can see in the next sort of 15-minute candle, and the market's not ripping. So I'm not looking at a low time frame footprint. I'm looking at a range extreme that's been developed over 3 weeks now. I would expect it to take a little bit of time and not sort of about face unless it goes to an extreme wick. In this case, we're at the lows. We're at a prior day's low, right? So we're at the low of the 13th. Let it develop, right? So you get some selling coming in. Buyers come in, try to get aggressive, but are absorbed, right? So we're right back below, and suddenly these sellers are no longer off sides, or at least the longs that close there are still justified in their positioning, right? What you want to do is see over a certain period, right, it develops. Okay, so you start getting more here. Just this general region starts to become very clear that this is acting as support, and it's a $500 zone, which is that's what we're looking at that point is a little bit more than one half hour ATR. So it's within reason. It's within expected volatility. Nothing abnormal. After we have a fair amount of development, one way that you can get long, right, is, especially if you're using more of a range-based bar, is you see the cluster of activity here. This is the first maybe sign of heavy selling coming in. You're looking for absorption to develop. It's very clear now that it's, in this 45.5, 45.6 level, that this level is acting, that level is acting as support, right? And it's not that, I don't even want to say that it's support. It's just kind of it's a net, right? That's an area where you would say, if you're sort of a first timer, not first timer, but this level is really important. Well, there's a lot of stops down there. So through that level is, an area where you're going to get voluntary selling, involuntary selling. You're going to get market orders triggered to, if anyone's dumb enough to use a market order there to trigger the breakout. Not a good thing to do in crypto as of the last year, because just breakouts are fake outs. Unless we're looking at a breakout that has been months in the making, and then we have high time frame closes through. Maybe that's your criteria for a breakout, but it ain't happening in the first 5 seconds. You might get a big throw, right? But you're not expecting it to suddenly take us on our 6-month trend from that break. So this is a really good area to expect sort of that puking behavior. And it gave a really good long opportunity. So I initially started tagging in this second candle, right? Once we started breaking down right here, I started tagging in because I just assumed that I didn't think that today we were looking at the break and the S&P at that point was bobbling around 46.3 and then popping up to 46.6, popping down to 46.2 and then up to 40. It wasn't, it looked like in terms of equities that this level again was doing more or less the same thing as Bitcoin's level was for itself, right? A pretty good area in terms of liquidity. There's a ton of volatility, but the market isn't exactly just going to fall off a cliff. So right now, excuse me, I don't hear the dog, which is dangerous because that could mean she's chewing the Christmas tree. One sec. You know what, guys? I'm sorry. I got to do this for 1 sec so really quickly, why I'm going to go pause for 1 minute is my wife and I had to redecorate one of our Christmas trees yesterday, our main Christmas tree. It sounds kind of silly, but my wife likes Christmas trees in all the rooms. Not all of them, but you get the idea. Not like in the bathroom looking at a Christmas tree. But what was I saying? We had to completely undecorate a Christmas tree last night. She decided she wanted to do it at 11 o'clock at night before we went to bed because the dog chewed through the lights. And I was like, that's kind of a fire hazard. This tree's getting kind of dry. So let me just make sure that I'm not about to be burnt down by the dog fucking everything up. And we will switch to pause. Okay, what's going on, guys? All right, so change the toy. Have her in here with me. She didn't do anything to the Christmas tree. Let me just get the chat back. All right. So what was I saying? Good area to get involved with a bounce. Just looking at where we currently sit right now. If this is going to be the range low, it's going to take a little bit of time to develop. If anything, what I would say is considering today where most of the volume has come in, which is right around 47. And that's, you can see VWAP currently, right, God bless you. You can see VWAP right around 40, 46.9. Okay, you want to go back out? I unplugged the tree, so don't screw anything up, all right? These streams are as real as it gets, guys. You have issues with the dog, no bathroom breaks, but back above VWAP, and I would say, considering what has happened in the past, getting long a little bit too early, expecting a reversal or the low to be put in, I would rather see that, if anything, if we're back above VWAP, I'd rather see how 47.3 responds right? Because if anything, most of our activity right now, as you can see, even to get back inside of today's value area, which is, not for nothing. If we were to combine, and it's not necessarily the best idea because, well, it's not a bad idea, honestly, because we're still within Monday's range. So if I was to combine this entire structure into composite, back above, and then that actually does work out pretty nicely. There's confluence in that area, rather. Back above 47, finding support above 47, though, I think is really important before there's any this is the best opportunity to get re-involved and the last chance to get involved in the reversal, yada, 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 because these highs right now, not for nothing, we could just take these highs and then end up playing back down towards the low and sort of just, again, getting kind of muddy down there. And it'd just be easy to get chopped up. As you can see, the markets right now are in take your money conditions. So if anything, if this is going to continue down, this would be the area where you would more or less expect it to fail. If not, taking these highs around 47.3 and then continuing down. Now, not for nothing, a lot of these movements right now are helped or aided by what's taking place in traditional markets. I changed my mind yesterday very quickly. So you guys, I was going to try to be transparent about that. Was sort of bullish in the morning. Okay, we're looking at a Santa rally, and hopefully you'll sort of see the logic behind this. Looking at a Santa rally into year end. I had a couple pieces of data that a friend who is in a group I am in, Gigantic Rebirths, Rebirth DAO. There's only a couple of us, and this guy's brilliant, shared some important, very useful pieces of data. So I'm like, okay, we're looking at high odds for a Santa rally, but a lot of that I think is contingent on the rest of the market also having sort of the predictable Santa rally that you would normally expect in good conditions in legacy. So being that yesterday the NQ, which is, we're looking at tech basically, just got slapped around. It's never good for crypto when crypto is, as I always say, it's kind of like a tech stock. It behaves similarly to a tech stock. It trades when there's traditional market volatility and the VIX is elevated. It trades very closely with the ES, but the NQ just got smacked. And it isn't a good way to, the Santa rally it's later on. It's not this far out. It's basically from Christmas to New Year's and a little bit after. But either way, it's like without that tailwind, I don't think crypto looks like it wants to do it on its own. So it turned out to be a good idea. I was getting long, and I had mentioned, I'm getting long, tagging on some right now. There was some Russia FUD. Market kind of absorbed that. Things looked all right, and buying into the idea that, all right, we're looking at on odds price higher later in the month either way. I'm going to tag on, half now, only spot, and then tag the rest on if we came down to where we are right now. Now, I ended up getting rid of that position, obviously, and I feel good about that. And had we came down to where we are now and equities had still sort of been on their perch, I wouldn't have changed my positioning. If we were still at the highs, if equities, I'm getting tongue twisted. If equities were still at the highs, if we didn't retrace these moves yesterday, I would have added now pretty indiscriminately, or just began to add now pretty indiscriminately. I'm going back to was my original criteria, which was buy at extremes much lower, buy higher. And for me, it just makes sense unless something changes, right? Because for me, I didn't know something would change yesterday, but it did, and I changed position, and it worked out to my benefit. So the idea that you have to marry your first decision is really stupid because things happen out of the blue in the market all the time, and you have to update based on that information. It's like saying, would you not update your positioning if the S&P took a 5% hit in 24-hour period? That'd be fucking nuts. And you would, of course, start to reevaluate. You wouldn't, tie yourself to the mast and go down with the ship at that point. So that's one thing. And then two, it seemed very reflexive. And this is where you have to be careful. And being careful in making really reflexive decisions as if they are sort of deterministic and for a given. So taking them for granted. So the Fed, while more hawkish than expected, nothing out of the ordinary, right? Expecting rate cuts in rate increases in 2020. It's always like, wonder if when we get there at that point, we'll actually get them. There's a case to be made for the Fed not being able to increase rates by much, period. But either way, right? So the Fed is not hitting us with a left hook, which is what we were ultimately looking for. Market had already priced in what was already more or less expected, right? But if you were going to get hit with a left hook, that would have been trouble. But instead, things more or less as expected, slightly more hawkish, right? But either way, after that passed, right after Powell talked, it was kind of like the market took for granted a green light, as if now is just going to be, market has another horn of plenty for everybody, and we're going to go ripping and roaring. And then it was suddenly very obvious to me that I was just subscribing to that idea that, okay, since we didn't die, now we're going to do great and going to have this Santa rally. It's very easy for the market to get crowded, obviously, on that type of rather lack of framework. And I could see it across the board. There was a lot of people in FinTwit, a lot of people in crypto, basically having the same sort of reflexive response to the market not being sent off a cliff, that, okay, now we're just going to get a Santa rally. That's not the right way to think, right? So anyway, one thing I wanted to go over, I went over this kind of last time, but I put together it a little bit more clearly now. Just honestly, higher time frame stuff. If you're getting chopped up, use some higher time frame trend tools. You'll be late, right? You'll respond later. You'll have to have a little bit wider stop. And, a lot of the times you're punishing people that are over leveraging. Their positions are more path dependent and they're not sizing appropriately either way. But I had mentioned taking out the MACD, right? Something that I don't really look at, but once in a while I do. You guys know you guys know me as pretty much a pure order flow and profile trader, but I always say it's great to be a generalist and have sort of a feel for trends as well, right? You definitely want to have that in this market. So a lot of the times, I will take out a moving average on the high time frame. And I've always said that this is a good sort of tool to use to sort of more or less gauge who's in control. So right now we have the 20 period on the daily, and we have the MACD. And if you remember last time, I said use something like the 2 or 3 day. You don't have to use a 1 week. You don't have to use a 1 day. Find the spot in the middle, right? 2 to 3 day time period. And you can see in the past, this has been quite actionable. Now, I wouldn't say that you just want to suddenly call the top or call the bottom. But what I would say is these in combination with one another, you could use something like Heikin-Ashi candles. I talked about this before with a trend-based tool. You could begin to formulate a system that at least gets you involved with a little bit more certainty that you have some wind behind your back. And that's what trends are about, right? A certain amount of momentum behind them when they start to shift. When you start to change higher time frame trends based on a very subscribed to metric, tool, or point of structure, you get a lot of people behind the move, right? So the 20 period moving average on the daily, we're looking at a 3-day chart, a 2-day chart though, but the 20 period right now is based on the daily, so a good line in the sand for bulls and bears. This is your 20 period, it's your center Bollinger line. Looking at the MACD and having something like Heikin-Ashi candles, which are based on either progression or lack of progression. There's a specific formula for them. I'm not going to act like I know it, right? But the point is, this has been something that is actionable in the past. What you have to accept for is that you might get involved and it not work out. Okay, fine. That's what stops are for, right? This is why you don't this is why you size positions according to, what you are willing to bear, right? According to your portfolio, your risk levels. There's no one size fits all for this. Obviously people say, hey, what kind of stop should I do? What kind of position size? I don't know, man. It's up to you. But be willing to take some kind of market movement and noise. So honestly, what would look really good? Well, to be honest, what would look good would be us getting a very significant close through this 20 period and this more or less flattening out. I'm not saying you have to wait for the turn, right? Because that implies that you might get chopped up, you might be late. I would rather see that this is beginning to flatten out. Momentum is beginning to slow to the downside. But if anything, I want to see that this is actually on the bottom and we're not still above, which is good. We're not still turning above. So this is a trend-based tool. These together, sort of in concert, will give you a late signal. So what that means is you might be at 54, right? We might be at 54 by the time this signal starts looking really good, or you even get the signal. Green candle, Heiken Ashi on the 2-day, above the 20 period on the daily, right? You know, this is at this point, price action is looking good. We're back above now, structure. Okay, so you have a lot of things lining up, but guess what? You're going to be late to that trade, right? It implies that you're waiting for that signal. The point is, you can have periods where maybe you got to 54, but we didn't have the close through the 20. We didn't have the change in momentum. What this is saying is, hey, I require a bit more information, but the point is, this has been pretty actionable in the past. At this point, this is something that is a clearer sign, a much clearer sign that the trend has changed. And this way you're not getting as chopped up. I like to have, some kind of understanding of what the trend is doing with respect to these tools. Now, obviously, I try to time the market a little bit sooner than what these are going to permit for. But I absolutely don't want to not be in the market when they do. So does this make sense? I am one who tries to get involved before these things show up, as I'm describing. That's the truth. I try to get involved before them. I look for other signs. I try to outsmart the market in that regard. Sometimes it works. Actually, more times for me it works because obviously I've been doing this for a while. Sometimes it doesn't, right? The difference is I get out when it doesn't. But I know if I'm getting involved in a higher time frame trend, it's a different kind of expectation for what is invalidation versus what is not. But you rest assured, above here, I am absolutely involved. If I went away on vacation, I was not able to look at price action, I came back and we're above and all that is satisfied, I'm just systematically getting involved and looking to deploy in sort of an efficient manner that gets involved sooner than later. But at that point, you have a pretty big signal. But again, big certainty. All this implies a level of lateness. And there is no certainty, but I think you understand what I'm saying. So I just wanted to take that out because last time I did a stream and I was kind of like vaguely talking about them. Like, oh, you could use a moving average. The MACD is good. But all of them sort of in concert, like I said, can give you a very useful signal, albeit it could be it is essentially it's late. But if you're a trend follower, what are you trying to do? You're trying to capture this, right? Understanding that you're going to be, getting out late and you're going to be entering late. All right. So that aside, so again, wicking into VWAP right now. It's fuck. I should have been paying attention. That would have been a good short. I'm actually just going to grab a quick short right now. I'm actually, for the sake of the stream, I'm placing a stop. Usually I'll just monitor these positions, but for the sake of the stream, I don't want to, you guys know how I could just start talking and I'll fucking forget what I'm doing. And this is not a significant position, but anyway, just added 3 separate lots, and it looks like my average price is 46,782. So let's see if we could get a few $100 rotation back down to the lows, maybe even 46.5. If this just stalls here though, I'll yank it. There's another ladder to the right of the screen that you can't see, and it's got a higher tick setting, and it has, this is where I'm just going to scale in with a little bit more and see if I can get filled. Right now, looking for 350,000 contracts. All right, now I just want this to hold under VWAP. Me getting out of this trade implies us back above VWAP. So that is right now, VWAP is at 46.885 region. It's basically top ticked right now based on VWAP. So if we start hugging this, I'll just yank it. But I have a stop up at, I have a stop an oh fuck stop, like I said, just in case at, what are we at? We're right at 47, 47.25. One contract is $1. It's a perpetual swap. Come on. Good amount of selling right now, more buying right now on futures, and a good amount of volume into that pocket right at VWAP. So we absorbed up there. You know, Delta's 10 million, but you have about 6 million contracts right against VWAP. So let's see. What I don't want to see is any selling come in now. So it's good. So looking at this right now, there's buying coming in, but there's no real selling coming in. A bad sign would be selling coming in and price holding this level. So what we're looking at specifically right here. So there's really not much selling. So, you know, I'm either on the wrong side of the trade because no one wants to sell this, or buyers are going to get absorbed and we're going to start to see selling when this starts to unwind. But what would be bad would be us holding against the underside of value right now, and let's say you see like 3 million contracts come in at 46.7 and price is just, now price is able to hold that level. It's like, fuck, probably wrong. So I'll let it go up again if it needs to work out a little bit, but not much volume being done because I'm using off the side of the chart, I have a volume-based chart, and it's there's not many candles even being printed. So each one of these candles is based on 2.5 million contracts. So I got some selling at the high. It's holding now. Let's see if it could fade off the high again. Nah, I'm just gonna flatten this. Buys coming in. Fuck it, getting reshort. Tagged on most at market, just seeing if I could fill another remaining 100,000 contracts. I merge profiles if just place a stop back up there. I merge profiles if what's it called? Where's my, come on, put the stop up there. I merge profiles if there is a pretty clear range that price is respecting and we have overlap in value. So in this case, we're still within Monday's opening range, which is pretty useful. Binance data is pretty shitty. So if you're using an order flow platform, I don't think it's very trustworthy. So going back to some of these questions, again, it's some selling. I want this to fucking fall below. Going back to some of the questions, the VWAP channel you're looking at is weekly. So weekly VWAP channel. And this is, as you can see, we're looking at third and fourth in terms of fills. Right, so second, third, fourth standard deviation bands for VWAP, for weekly VWAP though, which is good because I will often have a chart of the weekly TPO. So in this case, you know, I'm basically looking at where value is developing, understanding that the weekly TPO is more or less that this VWAP is coming out of weekly TPO, and those standard deviation bands are going to be pretty actionable in the same way the actual TPO would be, because I'm looking at the breakdown of the, you know, structures within them either way. So I'm not getting filled on that. Let me cancel that and chase it down. Now I'm getting filled. Okay. So it looks like you're getting a fair amount of absorption up here. Trouble is, even if, so what you're looking at is buyers obviously getting absorbed in this area. So that implies that you have, now obviously not all of this is due to contracts opening. There's contracts closing, shorts closing out. But the offer right here is absorbing a good amount of this. So if the offer is absorbing that and you have people that are opening up shorts in this case, passively, if we start trading, you know, if we just accumulate buys up here and we don't have any sells, right, and it looks like it's good to roll over because you know, it's not like we're seeing selling come in and it's holding, and then you would expect this to continue to trend up. If we just have buys up here, it might look attractive from the standpoint of absorption, but if we start just ticking above where most of the volume is coming in and it's holding it, this is just building volume higher than. Right? Even if it's all aggressors, the other side of that aggressor is a willing seller, right? And if we trade back above their orders, then they'll be the ones that cover, and then they end up helping us move up further. So ideally, what we get is some kind of structure that rounds out. Most of the volume is caught up here, and this is where actually, if you're using like a low time frame candle, like a range-based candle, price will be more or less confined, and candles will be like this, and then you could more or less see a trap set up, and once you break the lows, all of the delta that's confined within that area, if it's in this case mostly positive, unwinds and you get a pretty nice spill. Market's not moving that fast right now. I think that this is a decent area to get involved, right around the first throwback to VWAP. But like I said, the high is around 47.3. They're within play if we're going to run stops, and even if that would be the area you'd look for a reversal. Now the S&P right now is more or less doing the same thing. If we look at the ES. So watch the ES move, and Bitcoin's just going to move down with the ES likely. ES moves up. I mean, it's difficult to I wouldn't want to prioritize a scalp short in this case. If the ES is moving back up, then I would rather start looking back to 47.3 and see if we have any kind of ability to base out above that level. And then at that point, you know, if you're back within what is, you know, this week's range, one sticky point to the next, right? So we'll see if I get stopped out, if we trap more buyers up here. My stop's just like 100 points away, so. But now we're holding up, now we're above VWAP. I mean, it's either going to roll here or it's going to shoot above the highs at 47.3. But there's no selling coming in. There's a lot of buying coming in though right now. Not a lot, but Yeah, I'm gonna flatten this now. Because we could just end up coming up to 47.3 and then, you know, from there. Yeah, now the S&P is moving up. I mean, honestly, there's so many scalps where I'm pulling myself out and getting back in position, and sometimes just on the third time around, I end up making it all back and more. You know, the benefit of me pulling myself out of position is I'm not even getting hit for the full risk that I normally would take on the trade because I'm just yanking myself. So I end up taking myself out of 2 trades. It cost me what, you know, I could get myself out of 2 to 3 trades for the cost it would cost me if I have an actual full stop, which is not bad. This would be an actual prime area to start. Now we're starting to zero tick at the top. Not much volume up there, but if the S&P keeps pushing, this will just end up pushing harder again too. I'm gonna tag one on again. All right. Let's see. And FYI, so what did I see? Someone said something about Phemex volume. Phemex volume is 100% verified. There was a like Twitter beef back in the day, and since then they've been monitored. But there was Twitter beef between like Gainsey saying that Phemex was fake. A lot of people said it actually, and so someone who's a trusted third party who checks exchange volumes and data and order book data said, all right, hey, if you guys don't mind, I'll look into it. I have no skin in this game, no dog in this fight. You know, I'll be a more or less neutral person. And they checked into it, and there's no games being played on Phemex. So let's see if we could take that high, and then I'll just tag on 380. It's thinning out up here now. Tagged on more. Again, we'll end up flattening this if we just continue to push. Flatten. The moment I see that a lot of the times for these kind of trades, as you can tell, like if they're not working instantly, maybe they'll work a few minutes later, but my bread and butter is to just be able to cut out my positions very quickly. So when this is trading higher, even when it's looking thin and it's pushing, and you just have one side constantly pushing, it just doesn't pay for me to stay in there and try to muscle the market around. Usually these kind of opportunities should work pretty quickly. When we see a lot of buying come in and price is losing it, but it's able to hold, well, it doesn't mean that any amount of volume that comes into the market just has to be offsides once price ticks below it. And once it starts holding, it's the beginning of what is, can largely be a longer term, more sustained move. So if we're able to hold back above today's point of control, then I would just start looking for longs. The S&P and BTC are basically doing the same thing though. You see that? Yeah, so there's a lot of sellers at the bottom too on Bybit also. So just look at the amount of volume, but I mean, not all of this was just to open because you could see open interest going down. So a good amount of this was long, but if you look at, I guess we could look at BitMEX. what is that, USDT on BitMEX? Wow, they changed a lot since I was trading there. There we go. All right, you know what? Getting short again. This is the last place that I would consider. Now that we're at that 350 level and we're starting to struggle, it's either here or, like I said, develop support in this area. So it doesn't make sense for me to not take it. Let me add as we move up. So this is why I don't, a lot of the times, unless the market's moving very quickly, I usually will just tag on half and try to get the remainder filled, if any, with a limit. Most of the time I'm marketing in and limiting out. And just slightly filled, but what was I saying? Oh, BitMEX. Yeah, I mean, there was a good amount of selling at the lows, but 11 million contracts right there. This is Exo charts. Finally some selling coming in, maybe some profit taking by some of those longs. This is it. I mean, hold this level or there we go. Some help by the ES. Holding that point of control. We're about to scratch, what was that, 3 times, 4 times now? That happens. All right, now I would be looking to just scale out if we could start pushing lower. Let's see, a little bit out right here. Let's see if I could even get filled. Stopped right at my one of my take profits to scale out. Let's see, start coming below those low. I mean, start coming below where most of that activity came in around 47. And maybe we should have a little bit of a long squeeze. There we go. All right, a little bit more. Hold on. Getting back all my getting back all my scratches right here. Nice. Okay, puke, 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 puke. Just give me those lows. Yank. Nice. Good stuff. All right, cool. All right, so at least we clean that up. Scratch a couple times, and then catch a $400 move. How long have I known Josh? For 4 years now. 4 years? 5 years. Shit. When I first came on to crypto Twitter, it was 5 years ago. 5 years? Is it? No, maybe it's. I was on Twitter since 2012, but I was more of a FinTwit person, and my Twitter handle was, I'm pretty sure it was my name, or it was my, for anyone who follows me on Instagram, it was my Instagram handle. I got rid of that account, and then I joined Crypto Twitter and had a completely different account. But since the beginning, I think that so it depends, owner. When you are looking at so if I'm looking at, for example, the ES, if I'm looking at anything that's trading centralized and something like the CME, if I look at the volume profile, that is the volume, right, for everyone involved. If you're trading crypto, if you're looking at a volume profile for Bitfinex, and then you look at a volume profile for, Bybit, they're going to be different volume profiles, right? Because it's different volume done on these exchanges. For the most part, you'll see that levels will have the same amount of importance across exchanges, but you just get slightly different feedback. What I would say is, if you're using a volume profile for your, I use volume profile for the visible range, but if you're using a volume profile for individual days, it's probably not going to be much of a difference. But I would say that probably the best thing to do is to use it on the chart on the exchange that leads by volume or leads by open interest or combination, or is close enough to being a leader. Because you can have some aberrations from exchange to exchange. Like I said, the exchanges are very closely tied, and that's why you don't need to really use any kind of aggregated feed. I have the aggregated tape. We talk about the aggregated tools on Bookmap, and those are useful. But to be honest, if you're looking at, for example, if I'm looking at Bybit footprint, basically the same behavior taking place on Bybit footprint as there's taking place on, if we look at BitMEX footprint. Now it's going to differ, right, specifically on volume, but where the market gets really involved, more or less going to be relatively the same. As you can see, it is, going to be slightly different, but the exchanges, the activity is kind of more or less enforced and tethered together to some degree by bots, by algos. You're not really going to see an exchange do something out of, complete. You will, excuse me. What I have to say is that, yeah, there are cases where you have like these idiosyncrasies from one exchange to the next, where you'll have a big buyer that maybe got involved on Bitfinex. You see big whales on Bitfinex. You might have a crazy offside trader on Bybit, and at that case you want to be seeing that because that market's probably going to unwind that position or punish it or seek to punish it before any kind of continuation, or depending on how the market is moving, what direction. But for the most part, everything is more or less tied together. You at least want to just focus on the leading exchanges by volume, by open interest, or at least in the top bracket. With TPO, what you're doing is you're getting the structure, and the structure, again, can slightly change depending on if you're looking at a derivative feed versus a spot feed, right? If we look at Bybit versus Coinbase, there's going to be different lows and highs, right? Because wicks, you're going to find more profound wicks on derivative platforms where you have futures products traded. Kind of redundant, right? Derivatives platforms, futures products. Kind of the same thing. Well, not the same thing, but one is the other. But I think you get the point. For for market structure, I use TPO. On XO, I use TPO. I've shifted it around before. Like, oh, should I have the value area based on time or based on volume? I think it's always good to just stick with the time, because if you're looking, with the amount of exchanges we have, you don't want to have. Okay, I'd rather be with the majority in terms of picking up on the structure, because I know that it is reflected across the market, than have the volume profile accidentally change something drastically. That's not the case, but I guess I'm trying to paint hypos and how it could be. Not really the case that it's going to matter much either way, to be honest, because for the most part, for example, when we're looking at, just to drive this idea home or drive this point home, when we're looking at a TPO, for the most part, you're seeing how current day develops, but you're looking at the current day with respect to prior value, right? What context we're in, if we're in a rotational environment, if we're in a trending environment, where we sit with respect to that, where we sit with respect to previous levels where buyers and sellers were really interested, where they weren't. and prior value areas, prior points of control, prior tails, all that prior, right? But also the value area, like this is a line, right? Like you see that it's designated by a line in the sand. Like it changes based on the tick setting though. It'll change based on the exchange specifically, right? The same way a high and low will be different. So it's not going to be precise. So don't worry too much about the exact line. It's always the zone of operation, right? It's always like, okay, the value area is not, it's not me saying, okay, 47.52, that is the zone. Like if we don't hold that exact level, we're fucked. No, it's more like this is the area where I want to start to look for the signs of acceptance, right? To start to look for whether or not we were able to regain support. I'm not saying like, oh, 47.52 didn't hold. So if it's holding at 47.40, like forget it. I can't. I have to wait for it to get above 47.52. It's loose, right? It's not vague. It's loose. It's more of a zone than a line than anything else. So. Point of control is just going to be the area where we had the most amount of interaction. So you're going to see that that is going to be meaningful when we revert back to it. But that being said, point of control is an area where I don't like to take too many positions off of. I'd rather close positions into it because it's good for two-way trade. Typically, you'll find that there's a lot of liquidity around that area. Look for confluence. If anything, what I would say is if you have confluence, it makes the argument stronger. If your point of control with volume is your point of control with the TPO, even better. A lot of times you'll see that they are. So just to be honest, a lot of times they're going to be close enough. The short probably could have been held on to, but I took 4 losses in a row, closing myself out. I didn't get stopped out, so it could have been technically like 2 stop outs depending on the amount of slippage. But I'm just happy I made that back. I was getting a little bit trigger happy there. And a lot of times after a trade day, I'll look back and see like, oh, where did I get involved? That was definitely an area that I didn't need to get involved in. I should have just waited for 35. After I pulled myself out of this position, rather than assume the price was going to stop within the prior day, just go to where it's probably obviously going to go, which is to the next high. So you guys can see just sort of the dilemma that you face as a discretionary trader when you hear before I took these trades me say, okay, VWAP failure, or if we hold above VWAP, we're probably going to the highs. And if you remember, I took a trade between there. So focusing too much on sort of granular information like the footprint and not just saying what's more likely and better to combine, which would have been, in this case, more likely gaining VWAP means go to the top side of this range because it's not a massive range we're talking about. We're talking about a small area. And then rather than just getting involved earlier like an idiot, we're not like an idiot, but wasteful. Just wait for the high to get ticked and then see what kind of behavior we have at the high. And the high tick of that was 47,373. So 47,370. 47.3 and above is where we're looking for things to really start to peter out, right? And that's where we actually found sellers. So that's one thing. One thing talking about this back here is you have sellers come in, it's holding. Not good if you're selling and it's holding. But if you have a good amount of volume both sides and the sellers that come in are actually able to move price down, you might have found at that point the turning point, especially when you have some longs trapped up there and you have behavior begin to thin out. It was started as a zero print, which was basically a completed auction at that point. So yeah. Anyway. So back to looking like shit. ES completely retracing the move, so that's always exciting. Markets, it's not a good thing, right? Markets, if you're willing to just listen to some basic language, markets that are strong, what do? When they move up strongly off of lows, they don't give it all back quickly. So if anything, it's kind of obvious at that point that you shouldn't be V-reversing in the opposite direction. The only thing up, gold? Peter Schiff, popping bottles right now. Popping bottles and just talking to models because that guy looks kind of Messy. What else? Ugly. Audi JPY, sort of the old risk on, risk off sentiment tool. Everything in the red besides gold. Even the 10-year down. 10-year yields down 177 basis points. It's a good day to be flat. Did you just give away off $3,500? What? Can you say that again? Yeah, I'm flat now. Yeah, besides the just minimal amount that I have exposed for trading perps. On the trade losses, did you just give away off $3,500? Well, it depends. I mean, I haven't checked my balance, but that's a lot less than what I would be willing to give away in a single trade. So everyone's losses and sizing is going to be depending on their personal, exposure and portfolio size. If it added up to that, whatever. But if I haven't even checked obviously my P&L, but if I just gave back, if the original stop outs were for that, I don't know if they were that value, so I don't know why we're going with this, but if the original pullouts, so me scratching on the trade rather than getting stopped out, was that, then I definitely just made more than that on the short that actually was captured for 400 points, because my stop outs were for far less than that. So, or my scratches. So just to clarify, a lot of times I don't use, when I'm sitting in front of the computer like this, I don't use, a lot of times if I'm scalping, I do not use hard stops. I might have like a tail risk stop on if I have to go take a piss. But a lot of times I want to be in front of the trade to monitor it, and if not, better off to just be out of it. So more often than not, me getting out of a trade is literally saying, okay, it looks like we have a trap set up. I want to see the market fail here. My trap setup is contingent on, XYZ, a bunch of buyers coming into this pocket. This is a significant level. We should just start puking below it. If we're trading above it now, it's kind of like, well, that was what I hinged my argument on. Let me get out of this trade. And then maybe the trade transpires another 50 points higher. But then, as you can see, I have no problem getting back in the trade, but I'm not going to hold a trade that goes against a very simple thesis, which is this should puke when a good amount of volume gets caught into this pocket. Oh, no, I didn't, X-Fact, I didn't think that was disrespectful. I just didn't know what you meant by 3,500. I didn't know if you were talking about the ETH price or if I missed something earlier. Yeah, it could have been 3,500. I have no idea. I usually just look at that stuff at the end of the day. 3,500 would be I'd be happy to lose just 3,500 any day. I've taken, once you start trading once your portfolio grows and you're trading with larger size, it's all relative, right? So the percentages, it doesn't make a difference, right? As you grow, the notional value or the monetary value is going to go up, but if you're sizing appropriately, it's more or less what you would expect anyway. But I've definitely taken some pretty large losses that, just they're losses, right? You take losses, you get beat up sometimes. And I'm talking like high six-figure losses in my trading career. And losses like that, they do a few things. Hopefully you never have to have really big losses, but when you trade larger, again, the dollar amount's going to be bigger, but it's all going to fall within what you're willing to lose anyway. Ideally, as long as you're doing things properly. When you take big losses, when you start making a lot of money, you start realizing how ridiculous it is. If your whole perspective of money changes. And then two, I know for me, after I take a big loss, if I've taken a few losses in a row, I'll step away. but you just have this kind of feeling of like emptiness, like, oh wow, I'm gonna add all that up and think about all the things that means in the real world and how it's kind of gross that you can just brush that off at a certain point. When I leave something on, I always place a hard stop, but it's rarely, like, a lot of things that I leave on are more of my positional swing trades. So, you know, there might be a really good intraday setup. So let's say, for example, what would I leave on? So put it this way. It doesn't mean that it's locked on and I'm not going to get out of it before if something changes according to what I consider change, right? So this is obviously pretty personal, but for example, if we are able to close back above, if we're able to close above these lows, right? So we have a pretty significant close above. Let's say we get some 4-hour close. We're back above, you know, Monday we're well above Monday's lows. We're back within, more importantly, the composite. So that's around, you know, 47.3 and above, I would say, because at least that puts us above today's value area. If we are holding this level, right, what I'd be willing to do is to hard stop and expect that the middle would get tagged. If we look at sort of how this structure has moved from left to right, if we're holding these lows, and this is more of spot behavior, so I'm typically not doing this with futures. And this is actually, excuse me, I should clarify. I'll do this with futures if I'm already exposed to spot. But right now, being that I'm flat across the board minus the small amount that I have to have the futures account, I don't mean small, but you know what I mean. Like, I just have a certain amount for perp positions, and I'm using leverage on top of that to gain the normal exposure I would normally have. So let me just make this right size. Back within Monday's range, back within the composite, within this value area, holding around today's point of control. I mean, chances are you've had multiple efforts at the lows. What we're going to do is probably what? Just rotate back higher again. So at that point, yeah, I'd be willing to, let's say I got involved around 47, right? Tag a position on there. What I would do is I would have take profit, midpoint of that structure, leave the rest on. So at least have something to take off half. And then I would have a stop that is more than typically what the half-hour ATR is by more than likely 1.5 or 2. So if we're looking at a low, let's say, for example, low is, let's just use the 47, even though I said 47.3, just to make math easy for me. You know, half-hour ATR is right around 350, so ballpark it. So my stop, let's say I'm entering here, get a nice move below that low, getting involved, placing my stop below, you know, 1.5 that value. So, you know, 350 plus 175, right? So what we're looking at is what, 525, right? 525. So $525 stop off of that level. So, you know, let's say that it's 47 we're getting involved. My stop is at, you know, 46,425, right? 46,425, yep. And that way I know I'm outside of what is maybe expected movement if we were to sweep that low again. And I might have, in this case, let's say I tagged on half, I might have some limits down here just in case we end up coming back down to that low. But outside of that, have my stop, and then, yeah, be willing to just walk away. But a lot of times, like, to be honest, guys, I'm in front of the computer, and unless it's the first tap of a level, so first return back to a level, so getting re-involved in spot, similar to back down here. Once we start coming back to a level multiple times, I'm just less inclined to let it ride, right? Without kind of babysitting it. Do you take, yeah, so I haven't had a big loss in a while. When I was saying big, I just mean when you grow your account and you start realizing that you're making a lot of money, and then you're also taking larger losses because if you're scaling up and compounding. But after big losses, any big loss is kind of like, whoa, takes you by surprise. Market moves against you quickly. And I'm talking about, you're past your stop, slippage and all that. I usually will just take at least 24 hours away from the screen. Easier said than done, but I think it goes through it. I mean, if you have any questions, just DM me on Twitter. Yeah, if you're not emotional about the money, if you're like a sociopath, like I've said before, when it comes to money, and this is another reason why it's also good to not even look at your P&L. But that implies that you have to be trading in accordance with how you should be trading based on your size, right? Based on proper position sizing. Then you shouldn't even look at your P&L. You should just be trading more or less the setup. And if you're able to divorce yourself from that, all the better. And that's why it's very easy for me to, on those 3 trades on the way up, yank myself out. Once it starts to go against me, I'm not getting out for free, right? I'm not stopped out for the full stop, so that's really good. I'm stopped out maybe for a quarter of it, but getting out as that's happening, right? I'm slipping, getting out at market. One thing is I don't think about, those positions already, I have an idea of what lot size I'm willing to trade for the day. And by tagging on also, during this period, when I'm tagging on only half of that at the start, it gives me that benefit to where I'm only, potentially going to get, I haven't even got my fills yet for the remainder, and I'm yanking myself out of the trade. And at this point, I'm only halfway filled. So it's managed by that as well. But I already know what to expect if I do lose a full, right? If I was going to yank myself out at the maximum invalidation point, I already know what I'd be losing, and I'm okay with that, right? And I'm okay with that because it's personalized to me, right? Yeah. I mean, if you have you could turn a 50-50 coin flip game into a profitable one. Sure. I mean, my general system as a whole, so not scalping itself, so combining everything, I mean, I'm probably around a 50% trader. When I'm going through like a streak across the board, it's probably closer to 60. On average, probably around 45 to 50%. For everything, for scalping, I want my hit rate to be higher than what my general approach is. So general, I'm talking about like swing trades, position trades. But scalping, my scalping hit rate at times has gone well north of 80%. But it doesn't matter because it could also be 60%. And one just implies I'm still yanking myself out of the wrong trades right when they're wrong, right? When I distinguish when they're wrong. Now, I might have different performance whether or not I'm doing that properly in that moment and pulling out at the right time, or maybe I'm not picking up on something. Maybe I'm, you're going to have variance, but I'm just making more money whenever I'm right more often and still pulling myself out of the wrong ones than even if I'm, if I'm scalping and I'm doing 60, meaning 60% of the time I'm right. Still, you're doing really well as long as you're just not letting your losses add up too much and not letting any single loss be too large. Paying myself, I don't know, it's kind of random. I mean, I usually try to take out a lump sum each month. I've been doing that forever. I think it kind of goes against the crypto way, which is like keep all your money in crypto. But no, I've taken out, I think every single month. Maybe not. I think there's like maybe 1 or 2 months where I haven't, but every month I do, just to make it real. You have to pay yourself, and not for nothing. Like I like having a lot of cash. Also, it's just diversifying. In my eyes, it's like you just never know, and I'd rather always have, you know, knock on wood, something in case everything hit the fan, right? I mean, if everything hits the fan, you want to have a fucking bug out backpack, you know, survival book, a gun, and small denominations of bills, because you don't want to be breaking 100 in post-apocalyptic times trying to buy someone's can of tuna. So, all jokes aside. Crypto Way at Painesville, yeah. Yeah, my wife fucks around with me because I have a bug out chest that's in our bedroom. It's kind of ridiculous. But hey, man, if I gotta jump out of bed and shit's hitting the fan, I know exactly how things go on first, what to grab, where everything is, and that's what the big truck is for, because God knows the M is not made to survive the apocalypse. When I take out a lump sum, no, I always just take my tax. I always leave my tax money in stables. Yeah, I have a dude. No joke. I have a tomahawk. This is fucking ridiculous, but I have. It's not ridiculous actually, because hey, it's like when I was a kid, I always would have like, and this is like not like I needed it, but I always would have a pocket knife like on the side of my mattress. Maybe I watched too many movies, but I was like, I always need a knife right on the side of my mattress. No one's got to know about it. I'm not going to use it, but why would I not want to have one if I needed one? It's like in my entire life, I've always carried a knife on me. No matter what. If I was in a suit, I had a knife somewhere. Because I just figured, like, people would always say, like, why the fuck do you have a knife? I'm like, I don't know why. I hope I don't need one, but I know that when you need a knife, you really need one. And one of them may be when I flip my car, you know, knock on wood. Like, dude, have you ever tried to chew through a seatbelt? I know what knife works. I mean, you could think of a ton of reasons why. But yeah, next to my nightstand, I literally have a tomahawk in the nightstand. I will take a picture to verify it. It's a nice one. It's carbon fiber handle and everything. Yes, exactly. Always be prepared, right? It's better to be prepared than to not be prepared. No, I at this point in market structure, I start becoming more mechanical with. I'd rather be in cash than outright short, just because, like, as history has shown, for one, Bitcoin always looks the worst before it looks great, right? It's kind of like, and at that point, it's always too late. It's like you don't get like a 30-minute boarding time to get involved in the trend. It's literally, it's ugly, and then $500, $1,000 candle in the opposite direction. You know, in this case, sometimes 2,000, 3,000. So I don't want to be outright short once we get past a certain point. I'd rather just be in cash. It's you know, you get hurt being out. I'd rather be short things that I know I could kind of step away from, like alts that have high emissions, unlocks, you know, parabolic already, some obvious signs of structure, double tops on the weekly. But with BTC, it's like, from just a market structure standpoint, yeah, there's a bunch of areas that are reasonable to expect would give meaningful interaction. But we're already off the highs. We were 40% off. We're 30% off now. We don't have a big buildup in open interest, so it's not like we have any shorts to squeeze. And I've been trying to drive this home every time I stream now in the past couple of streams, because I originally was looking at the wrong information. I was looking at just my indicators down here for basis. Aggregated funding across exchanges has been on and off negative, but predominantly positive. And even more so than anything else, open interest is not really built up from any of the negative funding. So it's not like I think we have a, if we go back to, let me just make it easier, so rather than try to expect you guys to understand what I'm talking about. I love these streams when we talk about tomahawks and guns and treating sucking chest wounds by using saran wrap and a knife in your rib. I'm kidding. But if you look back at this period, just look at the difference, right? And one thing I always talk about for bottoms is like, it takes longer than everyone is talking about, right? It's always like, hey, it's going to turn. This is the bottom. Maybe this is the bottom, but odds are that it goes sideways much longer than you're willing to bear, right? So that's why I only get involved with spot positions in major moves like this for any kind of swing, because I have a lot more willingness to let it breathe. But sustained negative funding, right? None of that over here. On top of this, look at the drastic change in open interest to market cap ratio, which is more or less a sign of the amount of leverage in the market, or one might correctly assume. So in this case, it was largely in part due to stablecoins being used to hedge and just short. And in that case, stablecoin margin is ugly for shorts covering, whereas coin margins are ugly for longs, because stablecoin margin, just to get exposed to the underlying again, you have to buy to close your position, right? So you're short stablecoin margin contracts using USDT as, your margin to open the position. Your short goes against you. Oh shit, close the position. You buy, right? Now Bitcoin's moving up and you're in USDT and let's say you're on like Bybit. What do you have to do? Like, you have to either switch your USD really quickly to convert to spot USD, because they separate derivatives versus spot accounts. You have to do that. Or what do you have to do to gain exposure? Right away, you got to buy USDT margined futures. So you have to buy twice. Close your position, open to gain exposure. So there's, it's fair to say there's a lot of long pressure potentially built in when you have something like that. So right now we have kind of the opposite. Funding positive. Really nothing taking place though, no extremes. And this going up, but mostly again, funding being positive. So it could be very well that we're going to squeeze lower into this wick and maybe even lower than that, right? It's not out of the question. So the point is, that's great. Like, maybe we'll do that, but I'd rather be in cash than say we are going to do that. And I'm going to short, expecting what? We go down to 41, maybe. Maybe I don't short and we end up going to 30 and it's like, oh man, missed out on a short. But not for nothing, like, you make more longing than you can shorting, unless you're increasing your exposure that's unhealthy, in unhealthy ways. And I just don't see why it's reasonable to do that when you're already 30+% off the highs and we are moving sideways, right? So, still within prior daily levels. I'd rather scalp all around this than consider opening up a short. I mean, bug out bags are awesome. I think, like, why wouldn't you have one? I mean, it just... When I was a kid, I had woods behind my house, and I always went into the woods and, like, made forts and shit and dug tunnels and, would, like, mock camp there. Went on a couple pretty good climbing trips with friends. Did the Great Range in the Adirondacks. That was awesome for 7 days, just living out of a backpack, climbing. I think we did 11 mountains. That was one of the most incredible experiences of my life. I wish I did more. One of my friends is a portfolio manager. He ended up doing a lot of them, and I kind of flaked out. But I was in, like, relationships doing flaky things that guys do when they're in relationships. I feel like a dumbass now. But climbing the Great Range and climbing a pretty sheer mountainside. I'll tell you what, if you think you're focused trading, there is no greater focus than being in a thunderstorm, climbing a pretty sheer rock face with a 40 to 60 pound bag on your back. I've never been more focused on the moment in my entire life than that moment. And it was fucking amazing. But anyway, yeah, bug out bags rock. So a couple things, I mean, just for the long side of things, just because now it's like, I'd rather go back to my original criteria, considering the amount of, I guess, volatility we see still in equities. And we're coming to a period towards the end of the year where there's funds that are just marking off year-end profits and sort of securing the bag, so to speak. So maybe we'll get some more resolution in beginning of first quarter. But since that, I'm going to go back to my original idea for getting involved, which is development. And development implies some kind of change in the underlying behavior or local behavior. And in this case, we haven't really had any change in it yet, right? I mean, marginally lower lows. So we're just hugging the lows, not a good sign. This can a lot of times proceed or lead to breaks to ultimately do what I talked about, which is trade back within this wick. So let's say that comes, right? So we have progress downward still. So no change in progress. It's sideways, but it's still, sellers are able to impose themselves lower and lower each time. Buyers are still here, but we could just puke through quickly. Something like this, where we puke into this wick and then we're trading back within this range, that's a good sign, right? So probe into this level, very quick response by buyers, a lot of volume you would want to see transacted, right? That's one. Another one would be, this is basically a pretty clean range at this point. Midpoint of the range is around 50K. Let me just be a little bit more precise with this, again, rather than take for granted the fact that you guys are just following along, which maybe you're not. Midpoint of range right around 49. You're looking at the point of control for this entire structure, same area. Downward progress corresponds, relatively close to where that sort of important pocket would be. So most of the volume here. So once you're above that, it's clear that buyers are in better positioning for as a whole for the structure. So no longer can you say that sellers are really in control. So to be honest, something that pukes into these lows and we get another liquidation cascade and is reclaiming these lows, or gradual change in structure where we're able to put in some type of higher low. So we haven't been able to do that, right? Haven't been able to put in any kind of higher low pivot. I mean, look at it. Even this that led to a higher high locally, we had a lower high, a lower low, excuse me. I mean, that's looking at the 4-hour structure. So if we go to even like a tighter resolution or a higher resolution, you still see the case that I'm making, right? So if we're able to put in some type of higher low, hold 49, then I think what you're at least looking for is you're looking for around the highs of 51, 52. So I have to zoom out more. Let me go to the 1 hour so you guys can see, because I said 52, but you couldn't see why. Mid would look towards the highs, and I would expect the highs to hold it, initially. I wouldn't see why I would just blindly hold that. Much more obvious and much more bullish. And hey, this is the way it is, right? Because we are back within a range. So it happens to be, if we reclaim the range highs, that'd be great. I know it's going to sound ridiculous to some people because it's like, that's so far away. Well, I'd rather be certain or somewhat certain than try to be early too often. Back above 60K, I think, is really obvious, right? If you're finding support above 60K, this was the main line. This is where I exited the market. So there, right? If we're able to hold above 52, what are we probably doing? Closing out this low volume node right here. Probably tagging the underside of that structure around 55, 54. So there's a bunch of little trades within here, but the idea is that we're it's very clear we're back within a larger range. So if you guys remember, I had a pinned tweet forever, and it said, it boldly said, no all-time high before 2022, right? And I think I said something along the lines of no all-time high before the end of the year. Either way, it implies one or the other. And then longer-term range or midterm, I said something like midterm range, right? Something like that. We could search it. And then 100K long-term. Right? Either way, I think Bitcoin's going to be moving up over time. It's a matter of when. But my idea was that we weren't going to have anything significant until 2022. So we're back within the range. We're at the midpoint of the range. Just look at this structure on the high time frame. Where, if we I'll make this chart naked just to show you how I would look at these levels before we even got here. So we're on, that part is not included right now. This is pre the move down. Low volume node, low volume node. All right. So got the move down to that low volume node. This area was the flip. This is healthy area for, you know, prior activity. So could very well range within the structure. Being back above here presents an opportunity. Being below here looks really ugly. But I would still, so a move back down here, I would still look for sort of what happened down here initially. So take these lows and you probably see a very significant response. But if we're trading back within the structure, it's just one sticky point to the next. Chances are if we're trading below 40K, we're coming back down to these lows. And then, you know, then we have a bigger problem on our hands, which is just more time, right? I mean, people get sort of hung up on the idea that if we're not doing it right away, that it means we're never going to do it. But we see that when Bitcoin does things, it does them in a very short amount of time. So just look at this. That change took for price to go up in that area 250%. That took 13 weeks. Literally talking, if we came down here and it's not saying it's going to do this, but it's just a reminder of when this market moves, how fast it moves. And historically, that's always been the case. Bitcoin puts in most of its moves for the year in around like a 2-week period, right? Statistically, it's like maybe 2 to 3 weeks where bulk of the activity occurs. And then the market mostly is just ranging. Even if we had that, let's say we're just going 1 for 1 for that activity. That's implying in 13 weeks, we could do just that. And we've done it before. And we've done it before, right? So, and just remember, like, it always feels like it's the end of the world. It's always going to feel like that. And that's why you got to write down how you feel during these times, because you'll go back on it and be like, oh, I mean, at this point, I don't have to write them down. But I just remember, like, oh, I remember it always feels like, you know, darkest before the dawn, right? It's not going to feel good while it's really shitty. And that's the whole conundrum with trading or investing even. Getting involved when it feels the worst. I know this feels shitty, but I like to also get involved around good areas to define risk. Defining them being, this definitively looks above 60, excuse me. This looks very obvious at that point. And the range is being re-respected. Or down here, easy to define a position because if we lose this level, it's, what do they say, lights out? Temporarily, so. All right. Yeah, I've traded on Durbit. Yeah. Thanks, Matt. Nice seeing you, dude. I know that by the time I answered, you're probably out now, but. Yeah, coin margin contracts are good for, honestly, they're painful for longs if you're wrong. But it is like, you know, longing your longs because your underlying margin is BTC as well. But the convexity aspect of it makes it ugly if you're long, as opposed to shorts. Crossbow, homie. I don't know, man. 556 all day. I don't like to make 6-month forecasts. I'm much better predicting where a price will be in 5 minutes and 5 years, I think, than 5 months. Long-term markets tend to trend upward. Plenty of in-between activity, but long-term upward. And it's easier to predict where a price will be a couple minutes from now than it is a couple months or weeks from now. So, yeah, maybe it's the end of this cycle. Who knows? I think we're beyond the point where we're going to say crypto's dead. It's just a market now. It's just part of global markets. It's volatile. That's all you should really ask for as a trader. Long term, what does it probably do? It continues to go up, but what does long term up mean? I mean, even if we were to draw like a linear regression of this chart, or just extrapolate even from lows, it gives you a lot of room for price to come further down, right? And that still would be intact. So just understand what you're getting involved in, right? We're not early, but we're early in terms of an asset class. I'm gonna wrap it up after this. There's no one alive right now who was around at the beginning of any of the asset classes that currently exist. There's 5, 6 of them. So there's no one around right now that's alive that can say that they were around when the first stock was traded. So going back to the beginning, right? Not talking about just the New York Stock Exchange. So no one around. So this is the beginning of an asset class. So you're really lucky to be around right now. What I think people do too much, especially on crypto Twitter. In crypto, things move so fast. It's like dog years in markets, right? That where is my dog, by the way? Well, she must be sleeping because I don't hear anything breaking. That you forget that the idea of long-term investing in crypto is really messed up. It's like when people talk about long-term in crypto, even myself, because it's just how volatile things are, I'm like, yeah, long-term position, maybe hold for 6 months, wink, probably sell in a month, wink, probably sell in a week. But in equities, when a fund is getting involved in something, a large investor is getting involved in something, they're thinking, unless they're taking advantage of momentum, their CTA or fast money, they're thinking in terms of years, 2-3 years min. Might be faster now depending on how because regimes change, or regimes are much more they're just more responsive and things are moving faster. But being around now, like 20 years from now, I think Bitcoin is much higher. It's higher for a bunch of reasons, and some of them don't even imply the purchasing power going up, right? So it's just higher either way. And it could be zero, right? But it's always a possibility. But I think that there's a really high. I think in terms of, if you were to say, hey, you can only take one trade, it's a trade where you have to either be long or short, and you could look at the box. You could open this up 5 years from now. What do you want to be, long or short? And I'm saying long. What do you think the chances are of price being higher 5 years from now or lower? Much higher that they'll be higher. So, but yeah, there's plenty of cycles in between. I think crypto as a whole has to go through a lot of maturity. We're seeing NFTs go through their hype cycle the same way crypto did in 2016, 17. A bunch of promise, a bunch of, awesome things that come out that are going to revolutionize everything. But the tech hasn't even caught up yet. The hype is just over the top. So it always takes time for the tech to catch up to what the promise of the tech is going to be. You look at even like gaming and metaverse, and it's like previews of video games that look awesome. But even the previews of video games don't look nearly as awesome as the previews that we look at for our PS5 and Xbox games. And then it's like, yeah, I get it. You put all this time into making this preview for your game on the blockchain, but like, you paid a graphic designer to do that. What's the game look like? Oh, the game's not even developed yet. Oh, shit. Okay, I'll keep my money somewhere else in the time being. Tell me when everything's good. I'll be back. So Bitcoin, though, has already gone through its hype cycle. I think it's now, and ETH, I think, are going to trade much more in line with global macro and larger assets and on the main stage. So I think it's largely going to be, hey, are markets risk on or risk off? Okay. How is tech doing? So more of these questions. How is the DAC doing? How's the ES doing? S&P. I'm constantly saying the ES, and that's just a force of habit from trading the ES. So, I mean, guys, if you were around 2017, do you remember, like, everything was worth putting on the blockchain? It was like toilet paper on the blockchain, like everything. It was just because it was so catchy. If you attached your name to the blockchain, first of all, if you were a stock that were publicly traded, your stock ripped. And this is like a way to actually trade during any kind of peak euphoric hype cycle stage. You see it when a dog coin's popular, next dog coin comes out, rips, right? When during peak cycle, when any coin in crypto ripped, any coin that sounded similar in equities had the same ticker or same name or was loosely connected pumped too. And it was almost like it was algos sort of scraping social media and, you know, getting long and short based on this. TPO vol profile, that's on EXO. So EXO has DOMs too. So yeah, I think well, MSC, and then I'll wrap it up. When the VIX is elevated, Bitcoin doesn't bottom. Put it that way. When the VIX is up, it doesn't bottom. When the VIX is over 20, you see that equities and crypto are equities and Bitcoin are much more strongly correlated. It's almost tick for tick. It's close enough. Slight lag, and that's the inefficiency that still exists. Big moves to the downside, correlation goes to 1, right? So we're in a position where equities are unstable, right? Liquidity kind of dried up the last month. We've been talking about this. Yeah, the correlation is a lot more obvious. When traditional markets are smooth sailing, crypto can do its own thing. Now, by proxy, what's related to Bitcoin is going to be related to ES or the S&P when they're shitting the bed. So you have to keep that in mind. So yeah, elevated VIX, no good for risk assets. I'm gonna wrap it up though, guys. It's I think we've been streaming now for some time. So what I take 5 trades, made it all back in the last one. But today's Friday. Yesterday's usually the boring day of the week in terms of volatility. Yesterday and Sunday, volatility is the lowest on Thursdays and Sundays. But you know, it picks up more towards Sunday evening when futures open. But I don't know. Friday, it's quad witching day, so pretty significant day in traditional market derivatives. But with traditional market derivative expirations, but end of the year, so kind of end of year behavior you'd expect by fund managers and larger institutional players in legacy. So maybe we'll have like some free time going into the holiday, but who knows? All right, that is it. Have a fantastic weekend. I will be doing a call-in, so I'm going to do a call-in later tonight, but I'll post a link on Twitter, and you guys could hop in and we could talk. That's what we'll do. Just keep it open, talk, ask questions, you know, basic stuff. Till next time.